I want to talk to you guys about what I do here at Felton Trading, what I do every day. There are no secrets. Any questions you have, fair game. What's that signal? What's that indicator? How does that work? Anything you want to know. Trading is a skill, and skills require practice. And boy, you can sure cut down the learning curve by having a mentor, a trainer, a coach. You know, Muhammad Ali had Angelo Dundee, and the Karate Kid had Mr. Miyagi, and but traders, there's nothing easy about learning how to trade, and that's the reason why I make myself available to any trader. And many that aren't even students, but I make myself available to them any afternoon, any evening, up until 10 o'clock at night, and any weekend, Saturdays all day, Sunday afternoon. Any trader who needs help, they got it. And I don't charge a dime for it. Never have in 17 years, and I never will. Because it's the key. It really is the key to the success of many, many traders. I don't know many traders that never had anyone help them. They never had a coach, an instructor, a trainer, a mentor. The top traders of the world are the ones that had somebody in their corner, at least in the beginning, to get them on the right track, to become the best trader they can possibly be. Well, I've entitled today's presentation, Mastering Predictable Price Action. I heard many years ago traders touting price action, it all comes down to price action. And I was still, man, of my heart, my soul, every ounce of my being was wrapped around technical analysis. Man, technical analysis got to be the key. And it took a lot of years, but I finally realized that some technical analysis is okay. It just isn't a standalone trading system. At least nobody's ever shown me a system based on technical analysis that they could put in my hand and I could go and make money hand over fist tomorrow. I don't think there is one. But with training and guidance and incorporating price action into your trading, you can have the best of both worlds. That means price action setups with technical analysis filtering. Boy, what a great team. And that's what I wanted to talk to you guys about today. Let's talk a little bit about what is predictable price action. Predictable, price action, it means different things to different people when it comes to setups. Traders that trade price action, there are as many different setups for traders in price action as there are snowflakes, and they're different. But I found three of them that I want to share with you today that I think you'll appreciate. And one of the keys, one of the very beginning, basic, rock bottom foundation keys to what I'm going to teach you guys today depends on what bar type you use. I used to think that it didn't matter much, a 1 minute chart, a 3 minute, a 5 minute, a tick chart, a Heikin-Ashi, what's the difference? Signal's a signal's a signal. And I was looking and studying Renko bars. Oh gosh, years and years ago. I was studying the Renko bars in NinjaTrader, and which is the platform I use. And we created this software program here called Signal Pro. If I sat here and listed all the things that this software does, we'd be here for the remainder of the 45 minutes. It filters trades, generates trades in real time, not after the fact. It filters trades. It backtests trading systems. I could go on and on and on. If you're an Elliott wave trader, it'll plot them for you. If you are a scalper or trend trader, away you go. You can even teach this thing how you trade, and it'll go trade for you. Yeah, I mean, there's not much that this software won't do. But it's the bar type. Notice how smooth and predictable these bars are. If I were to convert this to a time-based chart or a tick chart, you wouldn't even recognize it. You wouldn't see more than 3 or 4 blue bars or up bars in one string, or more than 2, 3, or 4 red bars in together consecutive. They're red, 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 blue, red, red, blue, red, blue, doji, doji, doji. And I'll never go back to the old days around the turn of the century when time-based charts were what I used and many other traders. Maybe you guys still do. But many, many years ago, we created what we call the Felton Trading FT Renko Supreme Bar. We also created a version called the FT OHLC Supreme, where you can actually look inside each bar and see exactly what price did. Very, very important for some traders so that they can do backtesting. If you don't know what happened inside each bar, your backtesting data or your backtesting method is not going to be accurate. So you got to know historically what happened inside. What did the market actually do inside these bars? I used these in webinars for many, many years, and all of a sudden in the last couple of years, here we go. And platform providers, system vendors, indicator vendors, everybody and their brother is coming out with the Felton Trading Renko Supreme, only they don't call it that. And some of them haven't been able to duplicate them. None of them have been able to duplicate our open high-low close version. But these are becoming quite popular. You'll see them pop up on forums and different providers. They sell them. We do too. But they really come with our trading package. That's how they were designed to be used. But basically, what they are, you can pick the numbers you want. I call this my half-step chart. The bars, every single bar, the blues bars, the body of the bar, and the red and the blue, not counting the shadows, the tail, are 20 ticks tall. And the step size, the difference between the open and the close of each bar, is 10 ticks. So the step size is half the size of the bar. And so these produce very, very smooth price action patterns, divergence signals, and they're clear as a bell. Sometimes you couldn't draw those M's and W's any better than what these things do. They're amazing. If you haven't tried them, I encourage you to do so. You can obtain them out there. There's a number of people selling them. I don't know if anybody's giving them away, but they're available out there. But I guarantee you won't go back. You won't go back to time-based charts and tick charts and those kind of things. All right. Well, what do we do with these things? What do we? Now, how do we make money with these charts? Well, using price action, and I mean predictable price action. Those bars go a long way to making price action predictable. because one of the things they do, they self-filter their own noise, market noise. Time-based charts, 1, 3, 5, 7, 10, 15, 30 minute charts. They are noise factories. They're noise generators. That's all they create is noise, and that's what confuses so many traders. Tick charts, same thing. But price action can be made very predictable. It occurs in certain recognizable patterns, and this is where the difference lies. There's traders that look for this pattern or that pattern, and I found three. I like these because they're real easy to teach. That's what I look for. I don't teach Elliott wave. I don't teach Fibonacci. I don't teach Murray math. I don't teach. If it takes time to learn, I don't teach it. I don't teach. If it's complicated, I don't teach it. You got enough work cut out for you in the practice end of trading, without having to take months and months to just understand the fundamentals of a trading system. But these patterns help you determine what the market's going to do next, and they're often very predictable. And as I mentioned earlier, when you combine them with technical analysis, some technical analysis of filtering, it's terrific. Although technical analysis can be difficult to master, for long-term success, it can be very useful if you find simple little stuff that you can use to filter your price action setup that are formed by just pure price action. Used properly, technical analysis combined with price action can produce a really powerful alignment of conditions, I call it, that can work much more effectively than using either of them individually. My three favorite trade setups. These are things if you come into the trading room, you're going to see me using these things every day. One of them is what I call the stretch divergence signals. There's the long and the short version. The long is where price makes a W formation. It makes a typical W. Notice if you can notice on this example how the bottoms, the two lows involved in this divergent signal, are not equal. In fact, they're skewed quite a bit. We have structural rules that enable us to see what we call divergence. You have to put that in quotation mark. Divergent signal that other traders wouldn't see. They would dismiss it, and thus they would miss some really great trade opportunity, or they might. You would need to know the four corresponding being the key word, the four corresponding key points to any divergent signal, long or short. It depends on your oscillator and price and how those points line up. And I'll give you a hint: they don't line up where you think they do a good deal of the time. But this is a divergent signal. The code saw it, and it put the BD label on it. And that means basic divergence, just nothing fancy, just garden variety divergence. But what really made it special was this first leg. Every divergent signal has four legs. On a long, it has a big leg down. Then it has a moderate, small to moderate leg going up, number 2. Number 3, it comes back down to a double bottom. And number 4, that's your money leg. That's where you're making the profit. Now, on this chart here, we're going to talk about. We'll mention these indicators down here because this has a lot to do with the filtering that I was talking about, using technical analysis, including support and resistance. my programmer, who was probably a technical analysis genius. He came up with these support and resistance bands. They're self-adjusting. When the market starts, no support or resistance level ever lasts forever. The market will eventually start to ignore it. If it starts to ignore it, it'll turn it gray. And then if it continues to ignore it, it disappears. It cleans up its own mess. It's just amazing. And where these are located is so accurate. I'll very often I'll use them for targets because I know where price wants to go. And if it's got one of those bands, support or resistant, I can easily tell and where price wants to go, and get out there. But what I generally teach my students at first is this little green dashed line right here. That's their initial target, and it's 50% of whatever that first long leg is. From the very top to the very bottom, take half of it, and you've got that green line. It plots it for you. Now, I could go into the software and make it do Fibonacci levels if I want. But I found that 50%, and many times you'll see it go and hit 50 and then bounce away and never come back. It almost did it here, but the buyers recovered and headed on back up. But this is what I call the stretch divergence long. The inverse of this would be the stretch divergence short, which is just, if you flip this upside down, you got an M. So it's all W's and M's. And most of you guys probably are familiar with divergent. But watch, the best ones that are going to work are the ones that have that really long leg. This is what gives it that volatility. The markets hate two things. Markets just despise two things. One of them is being cooped up in chop or congestion. At some point, it's going to break out and it's going to run like crazy. It takes off with a vengeance. The other thing it doesn't like is big, rapid moves. When it makes this big, long red run here, 12 of these red bars, every one of them makes 6 ticks of profit potential. So you got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. You got 70, 80 ticks of profit potential here. The price wants to get that back. It wants to get all of it back, but it can only do that about 40% of the time. But it will get to 50%, 85 to 90% of the time. It's a little bit of filtering with some indicators, and then there's no magic indicators. There's a ton of things that will work very well as filters. But when you've got that high a percentage win on a particular setup, man, you can go a long way to get the battle beat. But anyway, that is the stretch divergence long, one of the 3 trade setups that I use every day and teach. The other one is called the sideways cycling market. The market will get in these, especially if after it breaks out of chop or congestion, it wants to run, and it doesn't just want to run in one direction. Often it'll run down for several bars. Here it ran down for 17 bars, and then he puts his little 50% marker in there. Then he runs up for 13, back down for 10, up for 6, down for 12, up for 7, on to 10, and then on down for who knows how many. This is sideways. Basically, it might have a little directional bias to it, but this, for all practical purposes, is just sideways. But look at what you know. Those 3 magic things about trading that make you unstoppable. If you understand them, you know exactly where to get in the market. You know exactly when to get in the market. Here's a little turn signal. This is a string of red ends. Then the turn signal comes in. You're starting to curl down here. and you hop on board. You get in at the close of this bar plus a tick. And you want to do it plus a tick. Put your order, your limit. I get in with limit order. I figure, okay, I think I know what the market's going to do. Everything's telling me what it's going to do or likely to do, but I want price to prove it to me. Show me that you're now going long. So I make it show me that first blue bar, and I get in one tick later, because if I put my order right at the closing price, then it could touch me, fill me long, and then turn right around and close as a red bar. I want that bar to lock in as a blue bar forever and ever. And that's why I give it that one extra tick. And then I've got my target. I know exactly where I'm going to get out. I know to the tick where I'm going to get out on every trade I take. And I also know where my stop goes. If I'm going for 2 bars or less of profit, just 2 bar, I'll put my stop at the opening price of my entry bar. If I'm going to go for more, like this trade here, I would put my stop at the, in this case, the closing price of that previous red bar, whatever the previous bar is. So in other words, your stop is 1.5 times the size of the body of a typical bar. And that's it. That's it. That's all you need. You'll get past these tails and things on if the market's going to come down and snag you, that trade's not going to work anyway. And so that's a good place to get out. My stop would be sitting right here. My stop would be sitting up here, and you get in right here. But my stop would be sitting here at the closing price of the blue bar, and I'm in right here because I want to be in when this thing is starting to close. This is a fantastic little, it's called the Elliott oscillator, and I've modified it somewhat, but it's a really cool little filter. I need to have 7 or more bars. More is better. There was only 6 here. That's why you don't have a target right there. But you've got a target here, you got a target there, you got a target here. Let's just see what the profit potential just in this little one section is. We run up 13 bars. We set our target there. It would actually be on the little dotted red line, but I moved it up a little bit so you could see it. I didn't want to cover it up. And then down you go. Get out. You'll get out. You got your order to exit the trade sitting right there on that little dotted red line, and you would have picked up, I mean, give or take a few 40 ticks, minus whatever slippage you get, which isn't in futures. It's not much. And if you're trading a fairly liquid market with reasonable volatility, you're pretty much going to get in where you want. You have a lot of control over that. This little trade, prior trade going long, picked up 50 ticks. And this one over here was good for 30 ticks. Then when it only went up for 6, there was no trade there. Then it dropped for 12 bars on those red bar, and we pick up 30 ticks on the bullish target there, and then 25 ticks on the final trade that we see. Kind of mop up you can get in sideways cycling market. It's a gold mine of opportunity, and at some point the market will just take off. It'll break out of this, long or short. It just suddenly would take off, and then it normally will start doing what I call a congested trending market. I think I have an example of that. Oh, here's you can also, as secondary entries, you can enter right at the crossover where the red line crosses the yellow. You also want to see the histogram really making a big difference in the size of those histogram bars. If they're just going kind of flat, the market's weak right in here. The market is weak there, so you would not take an entry here. You would take the entry over here. Then down you go, and got an entry right here. You got an entry here. I mean, every one of them. Look at the profit potential on every one of these little guys. It's an amazing little indicator. All right, let's move along here. We got congested trends, what I was talking about. I call these IBs, island bar. It's in a little white circle, you see a red candle, you see a blue, and you see a red. A red, blue, red, or a blue, red, blue. You get a one single color, and it's wedged. It's an island surrounded by a sea of red or a sea of blue. And we call that an island bar. I also call it a slingshot because that's kind of what it looks like. The two red bars would be the post that you hook the rubber band to, and the blue bar would be the handle. Whatever you want to call it, tuning fork, whatever you want to call it, it's a powerful little trade. And here's two of them right here. There's an entry. He labeled that one a stub because it had two, there were two signals on the same bar. There was an island bar and what we call a stub signal. You'll learn the structure of all these signals if you want to come in and visit us. Absolutely free. You want to come in and visit us in our trading room. You'll learn what they are, how they're formed. As I mentioned earlier, every question is fair game and every question gets answered. And you can see this one on this. So each bar is 6 ticks of profit. So you'd have 5 here because you're going to sacrifice one getting in, maybe but you're going to pick up 4 or 5 ticks here, and then 6 and 6. So you got 12 and 5, maybe anywhere from 15 to 17 ticks. Not bad for one single trade. I like to make a minimal. I like to make $100 a trade, and most of my targets are $200 to $300, and that's just trading 2 contracts. That's all I ever trade in the room because I want the little guy, the small trader, to know what is possible, what they can do trading with a small account and just trading 1 or 2 contracts. It's amazing. My daily goal trading my little 2 contracts in the trading room is $1,000 a day. I don't make it every day. I didn't make it yesterday. I made 913, but I did make it today, and I made it 4 out of 5 days last week. And you guys are welcome to come in and watch me do it. Most of the time I make it. And then I have students that are better traders in the room than I am. It's a fun place, and it's a good place for not just me sharing what I know about trading, but the students do too. So anyway, this is a congested trend, very highly directional and powerful trade. The exit, my rule here is if I've got a 50% target, one of those little dotted lines, go for it. That would have been 3 bars, minus whatever slippage. 3 bars of profit there. And if I don't have a target, if I've already passed it up, go for 2 bars. And many times I'm glad I settled for 2 bars. I don't get greedy. I have no problem taking $200 or $220 or $240 out of the market on a single little trade with 2 contracts. And you can do that with just two bars of profit here. Again, the same thing. If you're just going for 2 bars, put your stop at the opening price of your entry bar, the one with the little yellow arrow. A signal is a yellow label with a red arrow down or a green arrow going up with a yellow label. So you can see a stop sitting here never would have been touched. Stop sitting here, never get touched. So you know where your stop goes, you know where your entry is, you know to the tick where you're going to get out of the trade. So you know those 3 magic things that every trader needs to know. Successful trade management, and speaking of the things that every trader must know, you got to know exactly what must occur before taking any trade entry. What is your system? What has to come together? You know, whether you're trading like Michael's order flow, or you're trading Fibonacci or Elliott wave or both, or whatever you trade, support and resistance, price action, you got to know what you need to see before you ever touch that mouse, before you ever even think of entering the market. So you need to know your setup requirements. That you got to know they're met, and you enter at a planned price. You know where and when to get in the market. You got to know the exact price, I mean to the tick, where your initial stop is going to be placed. Now my stop, because I'm a scalper, my stop almost never moves. It just stays put, and I'm very often glad that I left it where I wanted, because once in a 1 or 2 bar pullback on the way to picking up a 3, 4, 5 tick target. And so you're looking at, you know, maybe 3, 4, 5, $600 in the trade. But if I moved my stop too early to break even, I'd get stopped out. I'd be nothing, zilch, nada. Know your exit point before entering any trade, unless you're scaling out or you're trend trading, of course. In that case, you don't know where you're going to get out. The market tells you where you're getting out, but you got to still have a methodology. You know, when and where are you going to move your stop if price goes in your trade direction, and what are you going to do if it doesn't? What do you do there? All right, those are the 3 things for successful trade management. Sounds simple, but takes discipline, guys. Takes discipline and practice, and extreme confidence. This is why traders break their rules. They lose confidence in their system, and their system may be perfectly fine. It hits a drawdown period. Oh man, I lost yesterday. I lost last week. I lost the week before. I'm down $5,000. Oh my gosh, you know. But if you just stuck with your system, you'd probably be all right in another month or 2. I don't like systems like that. I like being positive. If I'm not positive at the end of a given day, I want to be positive by the next day, or certainly by the end of the week. By the end of the week, I want to have averaged my 4-figure goal is what I want. 4 market conditions that all traders must recognize and master. The sideways cycling market. It's that market I showed you. It just goes up 10, down 9, up 8, down 7, up 14, down 12, up 9, down 8, and you just take those 50% targets. You can trade bi-directional, long or short, doesn't make any difference as long as you follow your rules. The cycling trend market. This is where your market has a directional bias, but it may go up 9 bars and pull back 6. Then it goes up 14 and pulls back 7. Then goes up 12 and pulls back 9. You know, you're climbing, you're making higher highs and higher lows, but the market, when it pulls back, gets your 50% target every single time, or nearly every single time. That's the cycling trend. Trade it bi-directionally, go long or short. But in that case, favor the buyers. If you're gonna push a trade for extra profit, do it on the trend side, not on the counter trend. The congested trend market, trade in the trend direction only. That's those IB trades where it goes up 8 bars and pulls back 1, and then goes up for 7 or 8, 9 bars, pulls back 2, then it goes on up and pulls back 1 or 2. You can't make money going counter trend in a market like that. But it is a gold mine of opportunity if you'll trade in the trend direction. Take those little IB breakouts. Don't wait for the market to go past the market will go up with a string of blue, and then you'll get 1 red bar. And a lot of traders, when you get the next bar is blue, they wait for 1 more bar. They wait for the market to actually bust through that level with these bars. Now, if you're trading time-based or tick charts or something, good luck. And the congested sideways, that's up 2 ticks down, or 2 bars down 3, up 2, down 1, up 4, down 3, up 2, down 1. You can't make money in that kind of market. Just sit back and don't trade, but get a big smile on your face, because the market is, when it breaks out of that, it's going to run like crazy. So just be ready for that. Okay. We'd like to invite you guys to be our very special VIP guest for 2 full weeks in our live market trading room. I'm not going to give you a sales pitch and say, hey guys, today only, blah, blah, blah. Our whole course is less than you pay for a clunker used car. If something works, it's worth a fortune. It's worth, oh man, pick a number. What's a system worth if it works? If it makes you $500, $800, $1,000 a day, what's that worth? You tell me. But most trading systems aren't worth a plug nickel if you don't have the training to back it up. Like Michael was saying, the previous speaker, you got to have that training, and there's no shortage of training with us. This is a lifetime relationship. You'll meet traders, if you come in the room, you'll meet traders that have been with me for 15, 17 years. I've got some that have easily been with me for well over a decade. And you'll meet them, and they just like the new stuff that we come up with, and the better ways of doing things, and the fact that if they want me to get them up to speed on something new, they can call on me, and it doesn't going to cost them a dime, and we might spend 2 or 3 hours together, logging into Skype or the phone and logging into the room and going over things. Okay. This is my goal here. You can see I made my goal today. I did it on 6 trades, averaged $178.50 a trade. But that's not bad, not bad. Now, like I said, there's students that beat me, but I made my 4-figure goal and did it on 6 trades. No loser, which is something I wish I could do every day, but I don't. For your 2-week period, you can ask all the questions you want. You can ask them in the room. You will get all questions answered, and you're going to enjoy an entire hour of intensive training each and every day. There's no shortage of training in our trading room. So we don't just, the trading is just to show you that what you learned actually works. It's there every day, all day long. It happens over and over and over, and the result is usually what you want it to be. And but you without the training, you don't know, and that's why we spend so much time. We train in groups and we train individually. It's the secret to what we do. In addition, you can schedule a one-on-one mentorship session with me. This is you guys, not student. They know they can do it anytime. But you guys want to say, I just like Roger, get together with me. I got some questions on some of your signal formations, and I want you to show me what you really like. What is your favorite setup? Any question you have. Or Roger, I tried trading your system as I understand it, and I got a couple of questions on some of the trades I took. Would you help me? Absolutely, absolutely. And none of this will ever cost you a dime. And another thing I think you'll appreciate is we will never ask you for a dime. We never ask anybody ever to buy anything. We're here to just show you what we do. If you want to join us, great, great. We're very, very, very inexpensive, but you get a powerful, powerful software, and you get unlimited mentorship and training and support every single day. There's no limit. And remember, that also includes weekends, because I have, I have traders that they work. They work. Hey, if you'd like to schedule your free 2-week, now this is normally we do a 1 week, and that's been forever, but free 2-week trial, email Beverly at feltontrading.com, and be sure, and we really mean this, be sure and mention that you were an attendee in today's Investor Inspiration Panel of professional traders to qualify for the full 2-week trial period. If she doesn't know that, then she'll set you up for a week, and but she has a little switch that she can flip for the 2 weeks. And again, there's no obligation, and nobody will ever call you or ask you to buy anything. We just want to meet you. You get to be friends, whether you join us or not. I think you'll enjoy. I think you'll enjoy what we do at Felton Trading, and I guarantee after your 2-week period, you'll be a better trader than you are today, whether you come on board with us or not. Remember, no trading system in the world is any better than the trader behind it pushing the buttons. Any trader who stops learning will stop winning, I guarantee. And the only way to succeed as a trader for the long haul is learn to trade for yourself. Remember those 3 things. It took me years to discover them. All right, we hope you've enjoyed today's presentation. I enjoyed bringing it to you, and hope you find its contents to be clear and beneficial. If not, then let me know.